Hey guys, this is Dave Meyer and you're watching Deal of the Day, a show dedicated to helping you analyze deals and become a better investor. And remember, these are real deals that could end up being yours one day. So stick around and enjoy the show. Hey everyone, this is Dave Meyer coming to you live from BiggerPockets headquarters here in Denver, Colorado. We have a really cool show up for you guys today. We really appreciate you being here. And because of that, we have a great show in store for you. First things first, we are going to analyze a deal like we always do here on Deal of the Day. As you just heard, the whole premise of the show is showing you how to analyze deals, how to properly allocate your resources when you're thinking about investing, and how to be confident when you go and buy a deal. So we're going to be talking about a single family home in Indiana, right outside Indianapolis, and we're going to be doing it on the BiggerPockets calculator. So we have invested all this time and effort into some really cool technology. It's going to allow me to show you what I'm working on my screen. We're going to be able to look at BiggerPockets. We're going to be looking at Google Maps. And best of all, I can hear and interact with you guys while we're doing this whole thing. So I love doing this, but I like it more when you guys are interacting with me. I can see your comments right now live while we're standing here. So shoot me a comment, let me know that you're listening, and most of all, please help us out. Show us that you appreciate this kind of content, that you like it by sharing, commenting, all that good stuff. Also, after this, after we evaluate the first deal, we have a bonus section for you guys today. We want to show off our new technology. We have some really cool stuff to show you, so make sure to stick around for the entire live broadcast so you get the most out of this deal of the day. All right, so let's get over to the deal. Again, this is a deal. It is a single family home. It is a 4-bed, 2-bath property outside of Indianapolis, Indiana. And we are going to move over to the computer now. So as I do this, guys, please let me know if you like this. Interact with me. I'm not seeing any comments so far, which is, oh, here we go. Now they're coming in. Bonuses are good. Yes, thank you. Glad to see you guys here. It's not at 5 p.m. each day. We're trying to do it at 5 p.m. Eastern on Wednesdays. We're going to hopefully be increasing the times and frequency that we do this in the very near future, but we are not doing it every day at this point. That being said, the best way to get us to do more of this stuff is to like, comment, and share. We do this stuff so we can interact with you guys. That is what we do here at BiggerPockets, and this is one of the coolest ways, I think at least, that we can do it. So definitely make sure to hit me up with comments and let me know what you think. All right, so let's move over here to the calculator. So today we're going to be doing something a bit different. Like I said, we're going to be using the BiggerPockets Real Estate Investment Calculator. You could do this by going to biggerpockets.com/calcs. And today we are going to be using the rental property calculator. If you are an investor or an aspiring investor and you want to be flipping deals, wholesaling, learning about a mortgage, you can do any of that stuff right on BiggerPockets. So make sure that you are on BiggerPockets. It is 100% free to sign up. If you're not already a BiggerPockets member, you have to do that. There's no reason you shouldn't do that. And today, for example, we're just going to be using the rental property calculator. All of them are super easy to use. All of them are incredibly useful if you want to become a real estate investor. All right. So before we jump into the calculator, let's look at this property. So one of the cool things we can do now is broadcast right what I'm looking on this screen. So big thank you to our video producer here, Zach Gwynn, for putting this all together. It's really cool technology. It's a whole lot of fun to use. We really hope you guys are liking it. So if you do like it, make sure to let us know. Let's get this comment section going. Has anyone been in Indianapolis? Anyone know about this market? We're on Marseille Road in Indianapolis, and we're going to just look around. This is pretty cool. I'm just having fun. I'm a huge fan of this feature when I'm looking at real estate, especially out of state or in a part of town that I am not familiar with. Using Google Maps just to get a sense of the street is really nice. As you can see, I haven't done this yet, but I'm just doing this for the first time. Again, this is 100% live. This is a really nice street. You can see a lot of the housing stock is in the area. It's not a house that is too nice or too run down for the neighborhood. It is appropriate for the type of neighborhood that you're in. You see pride of ownership in the neighborhood. People are taking care of their properties. That is something you always want to make sure of before you make an investment, especially in a rental neighborhood where you're trying to command top market rent. So let's get into the numbers. That's what we're here for. We're going to analyze this deal live. Again, I have not analyzed this before, so we're going to see right now whether or not this is a good deal. So the first thing to do, and feel free to go along, like open a new browser window if you want to, and go and open this calculator so that you can do this in just a minute. All right, so the report title, obviously, if you're analyzing a lot of deals, you should put something that you're going to remember. And before we get started, let me just stress how much you should be analyzing deals. That is incredibly, incredibly important. If you want to become a real estate investor, you need to gain confidence in the numbers. You need to know if you're going to be making money, how much of it you're going to be making, and if you only have enough money to buy one property like most of us, which of 2 or 3 different deals that you're looking at is going to be the best. So using a calculator, whether you use our calculator on BiggerPockets.com or you do it on the back of an envelope, one way or another, you got to learn how to analyze deals, and we're going to do this right now. So we're going to call this deal of the day. I think it's June 21st today. I'm not going to put the property address and all that stuff in right now just because we're not going to blow up this person's spot who gave us this deal. We're just using this to show you what kind of things you should be looking for when analyzing a deal. We will put the city in, which is Indianapolis, and please spare me if I make lots of typos. It is really nerve-wracking to type in front of all the people watching live right now, but hopefully I'll be able to pull this off. So the first thing we want to put in here is your annual property taxes. For this, we are looking at $1,100. And I am rounding these numbers, guys. So I'm not everything in real estate works out to these perfect numbers. And when you are analyzing your deal, be as accurate as you can. You want to be as precise as possible. So if it's $1,142, put that in. For the ease of this demonstration, so that the math is simple and I can explain it live to all of you, I'm just going to be rounding these numbers as I usually do. So get down there and do the property taxes. I'm not going to put the MLS number, and the sales description, I'm just going to put deal of the day. So that's just sort of entering the basic information. If you're not doing this on the BiggerPockets calculator, this is just a way for you to keep track of the information, keep track of the different deals that you're looking for. Jeremy Goodwin asks, are you going to county tax records for taxes or somewhere else? Yes, that is a great point. Usually, actually always, tax records are public. So just Google the address and the town and you can usually find it. A lot of times on MLS listings, they will also put the taxes on. So you do want to, you can sort of use that, but it always makes sense. I'm not saying that anyone would do this intentionally, but you always want to double check the numbers before making an investment. So if it is available on the county record, that is 100% accurate. So go there and double check your numbers and make sure that the taxes and all the square footage, lot size is the same as what you're seeing on the MLS listing or what the selling agent is telling you. Guys, please, we want to see some more comments, more shares. Last time we got like 41 shares. I'm not seeing anyone sharing this. We would really appreciate it. We've put a lot of time and effort into this, and you're going to learn a lot today. So share it with someone who wants to be a real estate investor. Share it with someone who you told you were going to become a real estate investor so that you can hold yourself accountable and get everyone involved in the BiggerPockets community. We make this stuff 100% free for you guys because we want to grow our community and we want you to help us do that. So please share this as much as possible. Interact with me. Tell me I'm doing something wrong. Make fun of me. I don't care. Let's just get some interaction going. All right. So here's the fun part on the calculator. This is where we start to figure out what is actually going on in this deal. So purchase price. This is coming in at $63,000. There we go, guys. That's what I like to see. Lots of comments, lots of reactions. That's exactly what we need. Thank you for doing it. Travis, you shared it. Really appreciate it. Big ups to Travis Buck. Thanks a lot, man. We appreciate it. This really, really helps us out. Okay, so this purchase price is $63,000, which living in Denver, Colorado, it makes me extremely jealous. But it's a really cool looking house for $63,000. So the next question it's going to ask you is after repair value. If you're going to renovate the property at all, this is where you would estimate how much you think the property will increase in value after renovations. So if you think you put, let's say, $5,000 into it and it's going to come up to $70,000, this is where you would put $70,000. This particular deal is not a renovation. So I'm going to put $0 for $63,000 for the after repair value because that's exactly the same amount as what we would be buying for it. Closing costs for this are going to be about $4,000 and estimated repair cost $0. Like I said, we're not going to be renovating on this deal. So we didn't do it. All right. So loan details. This is where it gets a little creative. A lot of people ask me, all the time actually, people ask me, who's the first person I should talk to? How do I get started? One of the first things you should do is talk to a lender. You need to get a sense of what your borrowing capacity is, what the rates are, and how you should best strategize for purchasing a property, whether that's your first property or your next property, if you have 20 of them. Talk to a lender. See what kind of finance you can get. Unless you're buying for cash, which I know I'm not, and most people are not out there, it's a really good thing to do. All right, so like I said, cash purchase. That's not me. I'm not going to be doing that. And for the purposes of this deal, I'm going to put 20% down. So for most investments, you're going to have to put 20 to 25% down. If you are house hacking, which we are going to talk about a little bit later, it's a hint about some of the bonuses we're going to be giving out and the extra stuff we're going to be doing later. If you're house hacking, you can put as little as 3.5% down. But since this is a single family home, we're going to treat it as a traditional investment, and we are going to put 20% down. So 20% down of the purchase price. And the loan interest rate, the going rate right now is about 4%. So we're going to put that in. Points charged by lender. Again, this is, if you're putting 20% down, you're usually not, you don't need points by lender. So I'm not going to put anything there. And other charges from lender are going to be 0 as well. Loan fees and points. So we're going to wrap the loan fees and points into the loan. That means that all the fees that are going to come around buying this property are going to get put into my monthly payment. That's awesome. I don't have to shell it out at the beginning. This is a really good way for new investors who don't have a ton of cash in their pocket to buy their first rental property. The next question to ask, interest only. I highly, highly discourage people from doing interest only loans, especially on rentals. If you're flipping, that's another story. But if you are doing a rental, you make money in two ways. You get rent, which is amazing, and you also get to pay down the bank. You pay back the bank and you owe them less each month. You do that by paying down your principal. But an interest-only loan, you don't do that. You only pay interest, and interest is just profit for the bank. So basically what you're doing is just giving the bank money, and you're losing out on half of the money you should be making as a rental property investor. So unless you're planning to hold the property for a very short period of time, I would really advise going against this. Next question, amortized over how many years? We're going to say 30. That's probably one of the more common ones. And then cap rate in your area. So the cap rate is basically how long it will take you to recoup your investment. And we're not going to talk about that much today because we're talking about analyzing deals, and this is a whole nother topic. Maybe we'll do a live session about it next week or something. But we're going to just put in 5. We're going to put in actually Indianapolis. Let's guess about 7%. All right, next step. So here's where you have to do a little research. You need to figure out the best estimated prices for your rent and your expenses. Before we do that, Jeremy asks, what about seller covering some closing costs? That is definitely an option. If this property is not selling immediately, that is something you can negotiate. It really depends on the market, I would say. If you're in a really hot market like we're in here in Denver, that's never going to happen. People are waiving their right to an appraisal. They're waiving their right to an inspection. Things are going crazy, so you're never going to get, well, probably not going to get a seller to cover closing costs. But if it's a rehab property that hasn't moved in a while, a foreclosure, these are all different things that you should absolutely explore. There's no reason not to check that out. So good question, Jeremy. Thanks for the question. Appreciate it. All right. So the gross monthly rent, we are going to put $950 here. How do we know this? One, this is a very unique property. Excuse me, it's going to be $925. We know this because this particular listing is guaranteeing a tenant in place for that price, which is awesome. So that is something you really would love as a rental property investor because it takes away a huge amount of risk. If you don't have that kind of assurance, if you don't know that right away, one of my recommendations would be to go to Craigslist. Go on Craigslist and look in the area and try and find similar properties. So this is a 4-bed, 2-bath. If you can find a 3 or 4 or 5-bed, 2-bath, something like that in a similar neighborhood and see what those are renting for, that's going to tell you a ton of information. The other thing you can do is go on BiggerPockets and ask in the forums. There are tons of information out there. It's entirely free, so that's a really, really easy way to get some information. And the last thing, and this is true of expenses too, which we're about to talk about in a second, is ask a friend. If you're not renting right now, ask a friend who is renting. If you're renting, you have a good idea of what these things cost. So don't underestimate what you already know about your neighborhood and what you should be paying for this kind of stuff. Jeremy, Rentometer can be good. I've used it in the past and found it to have a high degree of discrepancy between that and Craigslist. So I would use both. I think more information is always better. So use both, take the average, talk to your friends, take the average of that. Just talk to as many people as you can to try and get this stuff. So the next question on the calculator after rental income is other monthly income. And this is not true for everyone, and it's optional on the calculator, but some people get other rent. So for example, one of my rentals, I have a coin-operated laundry machine. So that's $1 every time someone runs their laundry. Every couple of months, it's, I take it out, it's $50 or something like that. So put that in there. Or maybe you rent out a storage facility or a garage, or you have pet rent. So that's where you would put that in. For here, I'm just going to assume 0, but when you run your own deals on BiggerPockets calculator, which you should be, you should definitely check that out. All right, so now we get to fixed landlord paid expenses. And this is where we talk about how much this deal is going to cost you. So electricity, we're going to estimate about $50 a month. Water and sewer, about $25. PMI, so this is this is mortgage insurance and only applies typically to people who put less than 20% down. For the purposes of this deal, we're doing a 20% down conventional loan. So we are just going to say this is $0 a month, which is great. Garbage is only going to be 20. HOAs, 0. HOAs, be careful about HOAs, guys. I always say this. Make sure to know what's going on in your HOA if you're buying into a condo. HOAs can levy basically additional expenses onto the owners of it's called a special assessment, onto a condo owner or a homeowner, and it can cost you thousands of dollars a year. So be wary of HOAs, and if you are buying a property that has an HOA, join the HOA. Try and get on that board so you have control over what is happening in the governing body of your home. Like, wouldn't you want to know that? Anyway, let me know in the comments section if you guys are in an HOA. Does anyone have experience with an HOA? I'm curious to hear. I have never worked with one personally, but I've heard horror stories. But if you have a different experience, definitely let me know in the comments. Would love to hear from you. Monthly insurance is going to be about $70 per month for this property. Taxes we already put in, and other monthly expenses, I'm putting squadoosh, the 0. All right. Thank you. Zach is coming over and giving me some fan because I'm sweating. It was 99 degrees in Denver today. It is both a hot market and literally a very hot city right now. So bear with me while I sweat a lot and give you guys this deal of the day. Thank you, Zach. All right. So next thing, we're going to talk about variable expenses. So the ones above, you have to pay that every month, right? You're not getting away with not paying electricity. You're not getting away with not paying your taxes or insurance. You have to do all that stuff. And so what we're talking about here is stuff that comes up less frequently and is a little less predictable. And so that is why we typically use a percentage for this, because you don't know on any given month. Maybe you have, $500 of repair in one month, then zero, then $20, then $2,000. We just want to know over the course of the year, how much are we averaging out? And this is a percentage of your income. So for vacancy, I'm going to put 10%. I know that this place comes with a renter in place, which is great, but that renter is going to leave one day and you have to prepare for vacancy. That's just something you got to do. All right, repairs and maintenance. I like to put at least 20% for repairs and maintenance and 10% for capital expenditures. I don't know much about the interior of this house, so it might be way less, it might be way more. It's really up to you to get a feel for how much this property is going to need in terms of maintenance. Next, property management fees. I do my own property management, so I'm not going to put anything there. But if you are going to put property management fees, the typical rates are usually between 8 and 12%. So if you're wondering how to estimate that, check out 8 to 12%. All right, next, future assumptions. We want to know how much this property is going to increase in value, right? That's what we're all here for. We want to make money on these properties. So how much is this stuff going to go up in value? Annual income growth. So we're going to say, how much is rent going to go up? I don't know this neighborhood well. I like to use 3%. I think that's a pretty safe bet. But something I always talk about, and I apologize if you hear me drone on about this all the time, but if you're going to increase your income, you have to increase your expenses. If you can raise rent, if people in your area are making more money, their wages are going up, then the guy who comes to fix your furnace, the stuff you buy at the hardware store to fix your house is all going to go up in price too. So I always make sure that my expense growth is always higher or equal to my income growth. So I'm going to put 4% there. And for my property value growth, I'm going to put 2%. So that's how much I think the actual property is going to appreciate. Lastly, if you're not an agent, you do have to pay a commission, usually 5.8% before you sell your property. So I'm going to do 5.8%. And here we go. Now for the great part of the BiggerPockets calculator. You just put, what'd that take me, 5 minutes? I mean, I'm stopping to explain this stuff to you guys, but if you were just doing this on your own, you could have done that in probably 3 to 5 minutes, that entire thing. And what you get from the BiggerPockets calculator is a ridiculous amount of information that you need to decide if a property is a good deal or not. So it will show you your income, your expenses, and best of all, your net operating income. So this is with a really high degree of expenses. So I am estimating that I would be spending, a ton on expenses. I'm being very, very conservative here, but I would still be making over $3,600 a year. So that is really, really awesome. I mean, that's really what you want to see in your investments, especially because you're not putting too much down. You're putting about 12 grand, you're getting 36. So that's a pretty good cash on cash ROI. But look at all the information you get here. So you breakdown of expenses, breakdown of income, income to expense ratio. All this guy is super, super information that you're gonna need. What you get when you come down here is total annual income, your annual expenses, your annual cash flow, what your ROI is. All this stuff is amazing information. So you can tell, 4.7% ROI, maybe this isn't the best deal. Frankly, this is a deal that I just found. I don't know much about it. I'm not promoting it in any way, really. But we are, and I'm just making up the expenses to be clear. This might be a great deal. I'm just doing this to show you guys how to analyze a deal and use this calculator. But look at all this cool information. Shows you how much you own on the loan. Remember I said part of being a real estate investor is that you pay down the principal, how much you own the bank. This shows that. If you sold in year 1, you would owe the bank $49,000. But if you sold in year 10, you'd owe them $39,000. So that's 10 grand more in your pocket if you hold it for 10 more years. Meanwhile, you're making rent during that time. That is awesome. Ed Robinson asks, are you just analyzing one deal? So we're analyzing this first deal, and then we're going to do another one in just a minute. I'm going to be showing you one of my rental properties, and I'm actually going to be showing you guys a brand new house hacking spreadsheet in just a minute that is not on BiggerPockets yet. It's a super cool tool that I recently developed. So just for being here today, you have an opportunity to get access to that as well. So stick around for a couple more minutes. I'm going to wrap this deal up, and then we're going to get into this bonus feature on today's deal of the day. So lastly, you want to see how much profit you would make if you sold. So even though you're making profit in the first 2 years, you would have to pay out your brokerage, your commissions for your broker. You would have to pay the bank back. So you would probably lose money in the first year. Again, I made very, very conservative estimates for this. If we went back and didn't put our estimates as high, this probably is a good deal. So I would definitely rerun this. Why not do this yourself? After this deal of the day, go on BiggerPockets.com, go to the rental calculator, check this out, and let me know what you think. You make your own assumptions, and then hit me up on BiggerPockets and let me know if you think this is a good deal. Travis thinks it's not a good deal, but go through it and let me know. So this is the BiggerPockets calculator, and just for joining us today, you are going to get 20% off access to these calculators. As a free member, you get to use it a couple of times, I think. But if you want full access to this, you need to be a BiggerPockets Pro member. And today we are offering 20% off that deal. And what that gets you is access to this calculator, and it also gets you the ability to print this out. So if you're going to raise money, if you're going to meet with a bank, if you're trying to wholesale a property, you can print these out and brand them to yourself. And we actually have a video for you guys, just for being here, about the Pro membership that you, just for watching today, could get 20% off of. It's an awesome deal. With a Pro membership, you'll have exclusive access to the BiggerPockets marketplace to look for off-market and investor-friendly deals you can't find anywhere else. Use advanced networking features on BiggerPockets.com to find your next client, partner, or investor. Locate local investors by zip code and meet the people you need to grow your business. BiggerPockets hosts weekly webinars, and as a Pro member, you'll have access to over 50 hours of in-depth content ranging from topics like how to buy your first investment, how to find and fund your deals, and investing in apartment complexes. A Pro membership offers unlimited access to property analysis tools to help you determine if a deal is worth pursuing and help investors avoid costly mistakes. Save your reports for later or download the PDF for you to share with your partners or lenders. If you're ready to start investing in real estate or looking to grow your business, go to BiggerPockets.com/pro and join today. All right, first of all, thank you to Zach for putting this together. It gives me a second to stop talking for a minute and get a drink of water, but also explains the BiggerPockets Pro membership better than I ever could in a live experience. It's an awesome thing to do. I mean, BiggerPockets Pro is not for everyone. BiggerPockets is 100% free, and we really want to make sure that we stress that. If you want to go and learn anything about real estate investing, that is free. If you are trying to invest in the next couple of months, if you are actively analyzing deals, which you should be if you're trying to invest in the next few months, BiggerPockets Pro might be a good idea for you. And if you think so, go to BiggerPockets.com/pro, check out the features, and I highly recommend it. I mean, I use this stuff all the time. I'm obviously on here talking about it. I work for BiggerPockets, so I believe in this stuff. But go check it out for yourself. See if this is something that you can benefit from it. Literally tens of thousands of people have benefited from this. We hear from them every single day how useful this is to them. So if it's useful for you, do it. And we also have this awesome deal for you. It is 20% off, and you use the code LIVE621. So that is the code LIVE621. So if you go to BiggerPockets.com/pro and go to the checkout page, you're going to get 20% off, and that is forever. If you renew your membership, it's 20% off, and you get all the awesome benefits you just saw there. All right. Also, just for being here today, if you use this code, you will get access to the house hacking calculator, which I'm going to show you right now. It is something that I developed myself This is something I developed for myself and will be going on BiggerPockets.com for pro members in the coming months, but not for a few months. So if you do want access to the BiggerPockets house hacking calculator, the only way to get it right now is to use the coupon code LIVE621 in the next day, and that's when you can do it. All right, so we're going to get to the house hacking calculator. Again, this is in Excel, and what we're going to do is go through one of the properties I own and talk about house hacking. If you have not heard of house hacking before, or you do not know what house hacking is, want a refresher, house hacking is like rental investing, except it is owner occupied. So there are two ways to do this. You can either have a single family home where you live in one bedroom and rent out the others. This is typically better for younger people who are comfortable with having a roommate. You probably don't want to do this if you have a family. The other way to do it is if you have you buy a multiplex, so a duplex, triplex, or quadplex, and then live in one unit and rent out the rest. And this personally is my favorite way for newbies to get into real estate investing. Specifically because if you buy a property with 4 units or less, you qualify for an FHA loan. So you can put as little as 3.5% down and get 4 units. That's an unbelievable deal. Who wouldn't want to do that? It's one of the ways I got started investing in real estate. Scott Trench, who just wrote a book about this, got started in real estate this way. Most of the people here at BiggerPockets who work in this office, who got started in real estate, started house hacking. So it's really an amazing thing to do. And so I'm going to walk you through this house hacking calculator. So let's take a look. Basically, it's in Excel. You're not going to be able to edit any of these fields because I don't want anyone to mess up the math. So I've locked the fields, but it's pretty self-explanatory on how to use it. So the purchase price on this deal was $720,000. The closing cost, $6,000. So anything in red here, you're going to be able to edit. So check that out. Conventional, I put 20% down on this property and the loan term was 30 years. Again, so 20% down. Just fill this out like you would. It's super easy. It's just as easy as the other calculators, but do it now. Or you can just go do this. The interest rate, this was a couple years ago, it was a little bit higher at 5%. My credit wasn't as good, so 5% was what I did. I did not have any PMI, which is great, but still, operating with PMI is a great way to get started if you're doing a house hack. So here's where house hacking differs from rental property investing. When you're living in that property, you're going to have a different amount of rent than if you're not living in that property. So you would have to make a difference. And what I'll show you is this calculator will show you a financial model for the time you're living in the property and the time you're not living in the property. So both really important to know. You want to know if you're going to be coming out of pocket or making money when you're living there. And if you move on and start building your portfolio, you want to know how much money it's going to be making then too. All right. So the rent, if I was living there, it would be $5,400 a month you would be getting in. If I was not living there, I estimate the apartment I would live in to get about $1,350. So that's the difference. And the current rent, what I pay currently in rent is $1,200 a month. I know for those of you who don't live in a big city like Denver or New York or San Francisco, these numbers probably seem crazy to you, but living in $1,200 a month is actually a pretty good deal for a single bedroom in Denver these days. It's crazy. It's probably doubled since I moved here 8 years ago, but that's reality and that's what we're dealing with. All right, so repairs and maintenance. I did buy this deal, so I know this stuff. So these are pretty accurate numbers. My repairs and capital expenditures together come to about $1,250 a month. My vacancy, I've actually never had a vacancy, but I still put in a little bit of contingency there just in case something happens. For property taxes, $350 a month. Home insurance, $250 a month. Electricity, $400 a month. Water and sewer, $150. Garbage, $100. No HOAs, like I said, and other. I just put $200 away a month just to be careful. Like I said, if there's a vacancy, I can put some money from there in. If I need to hire an accountant to do something special, if any legal fees come up, evictions, I just want to keep some money in an account to make sure that I am not losing my shirt if something comes up. So that is a good way to do it, is just put a couple $100 or a certain percentage away every month. Make sure that you're not getting killed if something happens. The assumptions here are the exact same as they were in the rental property calculator. So put in what you think appreciation is for your income, that's rent, the actual property value, how much your expenses are going to go up, and the sales commission. So I actually got a question a minute ago from Jeremy Goodwin who said, do you ever analyze deals assuming no appreciation? That is an excellent question. We're actually building a whole new tool. You might see the path to purchase on your dashboard on BiggerPockets.com. We're working on a new version of that, and this is something we've been talking about a lot. Should you use appreciation when analyzing a deal? And honestly, if you're new to it, maybe not. If you're conservative, you may want to just say nothing and see and make sure that you are going to make money even if there's no appreciation. Personally, I think that for a lot of multifamily investing, appreciation is just sort of a bonus. If you wind up making money on appreciation, that's great, but you want to be able to make sure that you are cash flowing even without appreciation. That being said, on single family homes, I look for appreciation. I look for properties that I think are going to appreciate. Recently, I bought a single family home in a neighborhood that's kind of, probably a B-C neighborhood, but I knew for a fact that there is a $250 million mixed-use development going in one block away. So I'm counting on appreciation for that. No way I would have paid that price for that house, not knowing that it was going to appreciate. So it really is a deal-by-deal basis. But Jeremy, that's a great question. I do think if you're just getting into this and you're unsure about appreciation, be conservative. Make sure your numbers work without appreciation. Don't count on it. You definitely don't want to count on it unless you know for sure that it is going to appreciate in a situation like mine. All right. Yes.
We got a question real quick. When will the house hacking calculator be available on the BP for Pro members?
Honestly, it's not in the immediate pipeline. We are rebuilding a lot of tools for you guys. You're going to see some really cool stuff coming out on BiggerPockets in the next month or two. I can't really speak about it. It's going to be a surprise, but you are going to like it. It's all really cool. So I'm going to say it's probably about 6 months maybe. So that's why getting it now is such a good deal. And the way to get it is by becoming a Pro member using the code LIVE621. And I will send you this in the email in the next 24 hours if you do that. So again, we have a long product roadmap, a lot of cool stuff coming out. This is something we're going to put on there, but this is why one of the reasons we're offering this to Pro members now, people who sign up for Pro now. Definitely check that out if you're interested in going to Pro. So here's how the model will come out. So it will have a lot of the same financial information that you see in the rental calculator, like income, debt service, expenses, net operating income. These are all very important things. And so this deal on its surface doesn't look like such a great deal, right? I'm losing $5,000 a year on this deal, but not really, because the beauty of house hacking is that you're not paying for rent. You have to factor that in. So what the house hacking calculator does that the rental property calculator does not is goes to living expenses saved. So my rent being $1,200 a year would be $14,400 a year. Sorry, $1,200 a month. So that means I am saving $9,573 by not paying that rent. So that is just as good as making money. Saving money is just as good as making money, which is awesome. Eleanor T. Francisco, how long do you have to live in the property to get the FHA 3.5% down? Great question. It is 1 year. You have to live in it for 1 year. And then if you move out, you do have to refinance it. So you can refinance the loan, but then you have to put 20% down. So that is something I'm going to talk about in just a second. This is actually a calculation that the house hacking calculator does that no other calculator on BiggerPockets does. So if you're interested in FHA refinancing, this house hacking calculator would actually be hugely beneficial to you. So next we go in the cash return and your ROI. So we're looking at 6, 7, 8%, which is amazing. And then we'll look at the sales scenarios. If I sold after year 1, I'd lose $8,000. Definitely we don't want to do that. But look at year 5. If I hold on that to year 5, we're making $122,000. That's 96% on the money I invested. Now that's what I'm talking about. Doubling your money in 5 years. That is really what I'm talking about. So I would love to see all of you get returns like that. It's really amazing. This is an awesome property for me. So about that, cashing out, if you refinance, if you put 3.5% and you want to build your portfolio, what you have to do is refinance as an investment property. And an investment property, you probably have to put 20 to 25% down. So that is an interesting calculation. You have to take equity from say your property is appreciated or you have some money in it, you've paid down your principal a bit. Now you can use that equity to put towards it. But you might not have built up enough equity to actually be able to pull that off. So what you're looking at in this deal, what this calculator does for you is figures out whether you can refi or not. If you have enough equity in your property to make money. So in year one, no, I cannot refi. So it says if I tried to refi, I would have to come out of pocket $8,800. So it tells me in the next thing, do not refi. In the next one, it says potential cash out refi. So in year two, I could refinance my property and the bank would give me $17,000 based on the equity in my property. If I put that towards another FHA loan, you could put that down for a property worth $1.2 million. Now there are limits on FHA loans. You can't buy a $1.2 million property. And so that will obviously not happen, but you can basically afford almost anything if you put that towards your next down payment. So Diana asked, how much is the pro membership? Ed, thank you. Ed, you're all over this. You're helping me. So it's $29 per month or $290 a year. And if you use the code LIVE621, you do get 20% off the lifetime of your membership, plus exclusive access to this house hacking calculator, which is extremely useful, I think. Zach was telling me how much he likes it before. Maybe he's just telling me that so I feel good about myself, but I think it's pretty cool. So the next model will be the non-owner occupied, which is similar, but it just assumes that I am not living there. And this is how much money, if I were to refi, the property would be making. So let's say I refi after 5 years. So that means after 5 years, I would be making about $17,000 a year. So that's about $1,500 a month. So I'd have another property having refied. I could use that money from the refi to purchase another property. So I'm not even coming out of pocket for any more money. And then I'm making $1,500 a month. That is awesome. So that is the beauty of house hacking. That is the beauty of FHA loans. So let me know what you guys think. I appreciate Jeremy saying it's a good calculation. What do you guys think of the house hacking calculator? What do you guys think of this deal? Dave says the deal you suggested was wrong. The equity of is 3.5% of 4 equity. Let me see. Right. So what I'm saying is if you took that property and refinanced it, Dave, using a new FHA loan, if you house hacked again and put 3.5% down on your next property and you used that $17,000 as the 3.5% down, you could afford a house that is $484,000. So I appreciate the comment. I should probably make that more clear in the spreadsheet, but that's what I'm talking about. So let me know what you guys think. I mean, I hope this is useful for you guys. Obviously, the pro membership is something I believe in and I think is really useful. If you're interested, go to biggerpockets.com/pro. Let me know what you guys think of this deal of the day. I hope you all can give me some thumbs up and some smiley faces for Zach for putting this together. I can't tell you guys how much work it is to be able to switch back and forth between cameras, to be able to broadcast what I'm doing on my computer, for me to be able to see the comments that you're doing, for these cool things to scroll across. Zach has done an incredible job doing this, so I'm really happy. He's really done an amazing job. It's just going to clap for him. He's standing here behind. I can't turn the camera on him, but he deserves a round of applause. So thank you to Zach for doing this. Thank you all for being here. Let me know if you guys like this stuff, what you want to see out of it. We now have so much more capacity to do these kinds of live deals. So please tell us what you want to see, and we will do what we can for you. We really want to make this for you. We love at BiggerPockets building our membership, building this community, and it's all thanks to you guys. So the more you interact with us, the more you're telling us about what you want and need from this, the better we'll do. So thank you guys all so much. Again, this is Deal of the Day. We will be back next week. Oh, wait, sorry, Zach.
Matt's webinar.
Oh, okay, a couple things. This Friday, if you're interested in flipping houses and you are new, we have a webinar entitled Flipping Houses Using Other People's Money. Matt Faircloth, who's the man, if you don't know him, he's a BiggerPockets contributor, and he is going to be doing this, I think it's 2 p.m. Eastern, 12 Mountain, 11 Pacific. Thank you, Zach. BiggerPockets.com/webinar. It's an awesome webinar. Go check that thing out if you're at all interested in raising private money, using hard money, any of that kind of stuff he'll be talking about. So definitely check that out, and check out all of our webinars for that matter. Again, my name is Dave Meyer. I'm here. I work at BiggerPockets. I get to do this because I love doing it and I love real estate investing, and I hope I've taught you something today. This is Deal of the Day. It's something we're going to be doing every week, hopefully more than once a week in the near future. But thank you all for being here. We really appreciate your time, and we'll see you next week on Deal of the Day.